Welcome to By the Books, the podcast helping business owners navigate the complex world of business, tax, and bookkeeping. Now, to the owner and president of Kline, Lindsay Kline.
Hi, everyone. Thank you for joining me today. I want to talk about how to read an income statement. This is one of the big financial statements that is published by, you'll see them for public companies. They are required to publish them. So if you ever look up financial companies or financial statements for public companies, you'll see this is usually the very first one. It's an important one. This is actually the statement that shows the performance of a company over a period of time. Oftentimes, it's either a month or a year. Sometimes there are comparative income statements that show you 1 year over another. It's important as a business owner to know how to read an income statement. And I've had clients that don't understand them, and I try to walk them through exactly how to read one. So let's go through the basics of reading an income statement. They're all going to have the same basic format. You're going to have income, cost of goods or services sold, your gross profit, operating expenses, and then what's called EBITDA. If you've ever heard of that word used, it stands for earnings before interest, taxes, depreciation, amortization. So after that EBITDA is where you're going to find all the miscellaneous stuff, the other income, the other expenses, the depreciation, the amortization, anything related to interest income or expenses. All that little miscellaneous stuff goes at the bottom. So all financial statements or all income statements are going to have the same structure. They may look a little different. They're going to have different accounts, different names, but the structure will be the same. So let's talk about the first section, the income section. It might also be called revenue. Companies typically break these out into different categories. You might have products, you might have services, you may even have subcategories of products or services, but all of your operating income will be in that first section, and it should be totaled out. That's pretty self-explanatory. I think most business owners know when they're looking at their income section exactly what it is. The next section that appears right under income is the cost of goods sold or cost of services. This is the direct expenses that relate to whatever product or service is being sold by the company. So, for example, if you owned a convenience store and you sold candy and soda, the cost of that candy and soda and the freight to get the candy and soda to the store, that is all direct cost that would be in this section called cost of goods sold. If you're a manufacturer, it may even get more complicated. You can actually put your factory overhead into that section, anything that's a cost related to making the product. And I actually have a podcast and a blog written specifically about cost of goods sold if you want more details about what exactly goes in this section. After cost of goods sold, there's going to be a total there. It's usually called gross profit or maybe gross margin. And that is your income minus your cost of goods sold. That is telling you, that number is telling you what you have left over after your direct expenses for your operating costs. The next section is those operating costs. That's going to be things like your advertising, your utilities, any admin staff that you have, such as accountants or receptionist, any staff member that's part of the operations of the business and not directly linked with products that you're selling. After all of those expenses, that's where your EBITDA shows up, your earnings before interest, taxes, depreciation, and amortization. That's telling you your operating profit, what you made during that period strictly from your operations. After that is where you'll find the other income category. This would be miscellaneous income. You might have gotten some interest income. There may have been some sort of credit card rebate. You might have gotten some sort of income from an investment. This is where all those miscellaneous income categories are put. Anything that's not related to your operations. Then after that is your other expenses. This is where you're going to find your depreciation and your amortization expenses. At some point, I will do a podcast about those because that's also a confusing topic. But generally, depreciation and amortization is the write-offs that you're receiving from purchases you've made or intangible assets that you have. Every month, you get some sort of expense allocated for those things, depending on whatever depreciation or amortization schedule you have for that item. Lastly, you have your net income. This is your bottom line. This is after everything. All your income, your direct costs, your operating costs, your other income, your other expenses. What's the bottom line? When people say bottom line, that's what they're talking about. The net income. That's showing you what is your profit or, heaven forbid, a loss for that period. This is going to tell you how your company did after everything was accounted for and said and done. This number, this net income number, feeds into your balance sheet. It is either going to add to your company's net worth, i.e. your equity, or it's going to take away from your company's net worth if it's a loss. In my next episode, I'm going to talk about how to read a balance sheet. So we will talk about where that net income feeds into a balance sheet. Join me next time to learn how to read a balance sheet. I hope to see you there. Thanks so much. Bye-bye.
By the Books is presented by Kline. Honest, accurate bookkeeping performed on time. For more information on Kline services or to get a hold of Lindsay, visit Kline.com or email info@Kline.com.
The information provided on this website and podcast does not and is not intended to constitute legal advice. Instead, all information, content, and materials available are for general information purposes only. Information provided by Kline may not constitute the most up-to-date legal or other information. Listeners should contact their attorney to obtain advice with respect to any particular legal matter and should refrain from acting on the basis of this information without first seeking legal advice from counsel in the relevant jurisdiction. Only your individual attorney can provide assurances that the information contained herein and your interpretation of it is applicable or appropriate to your particular situation.